FOMC meeting and Chalki's earnings. Hello and welcome to our weekly outlook. We are welcoming the new week. While last week most stocks closed at their historical highs. And more interestingly, in the week ahead, we have both Federal Reserve interest rate decisions and Chalki's earning reports all together. Besides these massive events, we have a heavily economic data. It will be a crazy week. Let's take a quick look at the most important events of the week ahead. Number 1, Chalki's in the spotlight. All market eyes will be on earning reports in the week ahead as it's entering to its hottest days. In the week early, Tesla on Monday will start the week. Then on Tuesday, Apple, Microsoft and Alphabet will report before the Facebook report on Wednesday and Amazon on Thursday. Of course, we have many other market elders like Visa Card, General Motors, McDonald's and Boeing as well that we need to observe them. Number 2, German IFO business confidence. As we sign June numbers for July also, we are expecting that the upbeat data to continue the way and confirm that the German economy is healthy. With the faster spreading of Delta variant of COVID-19 and the latest worries about the economic recovery path, and while in June the German IFO business activities hit the 2 years high level, now there are some worries, and these worries telling us that the manufacturing activities can still be positive, but service sector can be under pressure. These data are expected to support the current pools of German stocks. Number 3, FOMC interest rate decision and its press conference. Federal Reserve will finish its 2 days meeting on Wednesday. Given the weakness in the recent released economic data, and many analysts predict that the Federal Reserve will have a clear path before its annual conference in Jackson Hole in Wyoming, we do not expect any change in its policy, rates, and asset purchasing amount in this meeting. If so, the current bull market will continue its way, but with more caution. Last week, Nasdaq and S&P 500 both printed the new records, and still the trend is getting enough support to continue its path. Number 4, GDP in US, Germany, and Canada. For the US, we are waiting for the 4th consecutive expansion. Developed economies have managed to rebound faintly in the second quarter, comparing their free fall in the second quarter of 2020. Still, for the Germany and Canada, it must be the first quarter in the past year to see the positive GDP numbers, primarily thanks to the manufacturing sector and increasing personal consumption. These positive data are supposed to help the energy market once more, especially after last week's decline. And finally, number 5, US personal spending and income. Last month's published data confirmed the Federal Reserve transitory comments about inflation, as it was down to 0.5% from 0.7% of the month earlier. This week, the FOMC's preferred measure of the state of price inflation will be watched closely, especially with the increase in retail sales numbers in June. We are waiting to see the growth in personal spending numbers as well. However, as increase in retail sales has been patchy, the increase in personal income and spending also does not seem to be seeing much growth. Given these data and estimates, US dollar index pools will be limited around these levels as the market cannot count too much on Federal Reserve earlier hawkish plans. Thanks for being with us and hope you're having an amazing week ahead.